Hi guys, welcome to another video by Optionables. My name is Ayush and I'm a trader. In this video, we'll analyze Nifty and Bank Nifty and also we'll look into how we can trade based on options better for the next week with an example of how Sensex expiry happened on Friday. So that will teach us a basic of how stop losses and not placing stop losses on time can be very dangerous. So now we'll go to the screen recording where we'll analyze Nifty and Bank Nifty one by one and conclude on the fact that what levels are important. Hi guys, welcome to the screen recording. So as you can see, we'll start with Nifty, and Nifty has made a candle which has been very hectic today. Today being Sensex expiry, it was a very painful day for somebody who would have traded Sensex, because the reason being that in the morning there was one way strength in the upside, and after 12 o'clock the market literally fell one way. And what hurts more on such days is somebody trading non-directional initially would have got hurt on the call side, and then when the market actually reverts back, if you are not with the direction on, if you are not having a delta bias, let's say when the market is falling and you are not shifting your puts sold down, or let's say aggressively shifting calls down, then you tend to get hurt. And those are the days when you generally tend to overtrade, because firstly your ego comes into picture when, let's say, initially you got wrong on the call side and then on the put side, and whenever certain days, those are the days where you have to call it a day and stop at a certain percentage, whether it be 0.5% limit for the day or 1% limit for the day. So coming back to next week on how we can trade Nifty and Bank Nifty or any other indexes per se. So the thing is, if you can see here, like if I have to mark, let's say this range was something where the market would have given a breakout, and then HDFC Bank results came and then the market fell, and the next day also when this previous high got tested, again it fell. But one thing was clear, that there was no downside movement or no downside follow through coming up. And today we actually had, yesterday was a budget, but what price action move came on Friday today was more of like after effects of budget or what could have happened on budget. So generally now what we can see here is, let's say this breakout came and the market opened here with a gap up. If I have to show you on smaller time frame, so you can see that this level was broken and initially the market went. So if in the coming time, let's say this low, candles low, which is 21,700 is tested, and again market goes down breaking below, the market can turn bearish, because a candle which was a breakout candle fully up move came and then the whole candle got digested, showed that the bears were active. And the reason being that this level, you see previous all-time high level 22,133 pinpoint, today's high also is 22,126, and the market tested that, and as if somebody was waiting for the market to come at that level so that they can sell it. And the literally same thing happened on 15 minutes. I have to show you. You see that the market initially went one way up and then fell. So on such days, if let's say this candle's low is broken, then the whole week's structure for the coming week turns bearish. And for upside, until and unless this candle's high is tested or broken, don't have a directional bias on the upside, because something like a doji, which was a very strong candle for half of the day, turning bearish is not a good sign. So now coming back to Bank Nifty, if you see, we have been talking in the last few videos that the Bank Nifty was moving in a parallel channel upside, and whenever the breakdown came due to HDFC Bank results, the market structure turned bearish. And we were, from the very first, we were saying, or we were observing, that Bank Nifty has been relatively weaker than Nifty. So what happens here is, let's say if we mark one level, which can be, for example, let's say this HDFC days high. So for example, if we are marking this level, which is generally, let's say 46,540. So whenever market has come here, the market has seen a sharp fall, and today could have been a breakout day, because this structure which has happened here, this consolidation which has happened, because particularly if this day the market fell 2.26% and then no down move came, again market went up, and again from the pinpoint 46,550 we saw a sell off. So currently for the coming week, Bank Nifty also is looking a bit weak, unless and until this level is broken on a closing basis and we see a good green candle on a daily basis forming here. So until and unless today's high, which is, if I have to mark, 46,900 is broken on the upside, don't go bullish aggressively. If you get any chance, you can use this resistance level to take high risk to reward trades, where your risk will be low and your returns or risk to reward factors can be high. And whenever until and unless this level is broken, don't go aggressively bearish also. But the texture seems to be weakening a bit. So in this range, we need to play within the range and we need to play non-directional. So now coming back, how can we improve when we are trading non-directional is always have stop losses, because somebody today who traded Sensex and who was watching for some level to be broken, because if I show you Sensex chart, let's say we just see Sensex chart. So if you see Sensex chart on a 5-minute candle, we'll see that whole day market initially opened 1% and then full candle 1%. First 5-minute candle was 1%, and from that consolidation happened, and then there was a rally of more than 1%. So from yesterday's low, market went from 71,600 to 73,000, nearly 1,300 point rally, and then the market fell. So this fall would, if somebody was simply watching for this level to be broken, in this fall there's something called IV or option Greeks. If you're not understanding them, the speed at which market fell, it would have imploded the puts, and puts would have rocketed simply. So if you had a stop loss, you would be saved, but if you're trading level based, you would have got on call side hit and you would have got hit on put side. And due to some events, let's say we are trading one day before the budget, it is understood, or one day after the budget, it is understood that market can give irrational behaviors, and this can happen until and unless for the coming 3-4 months also, because coming 3-4 months we have the general election for the prime minister candidate, and that is one of the major event in the stock market. So that defines a lot of IV going up and India VIX going up, and even if the up move comes, the call gamma effect will hit you. So you need to always have a stop loss in the system. So now again, coming back to what our view is for the coming week, we simply want to trade within the range, but we have to have a bias which is a bit bearish. But for us to go very aggressively, let's say one way down, we have to break this low. Once this low is broken, bank nifty can actually be weak, because the biggest component of bank nifty, HDFC Bank, has been looking weak. Even though after falling so much, there was no sign of any like accumulation doing, because you see from actually 52-week high, within 10-15 days it actually tested 52-week low. And once after this fall also, there is no such thing that let's say some demand zone buying is happening, because if you see this candle's low again, that 3-4 days, and again today, if it could have been the best day to break out from this small tightness, but it again fell. So this shows that the biggest component of bank nifty is taking bank nifty down. So that is how we should trade, and we should always give importance to the components which are making the index. So that was our video for this coming week. If you like this video, like, share and subscribe to the channel. Thank you.